This is the junkie trader. He opens his chart, sees a MACD crossover and buys instantly. No support, no resistance, no plan. Sometimes it works and he feels smart. Then the exact same strategy blows his account. He has no idea how it happened, and now he's back at the job that he hates, wondering why all the guru advice never worked. This is the operator. He doesn't react on impulse. He stays disciplined. He waits for price to come to him. He only enters when the market gives him a reason. That one difference changes everything. Same indicator, same market, completely different outcomes. The MACD isn't a bad indicator. The problem is how most traders use it. They treat every crossover like a buy or sell signal, and that's exactly what ends up blowing up their accounts. In this video, I'll show you how MACD is meant to be used and how to combine it with structure so the signal actually makes sense. I also share market breakdowns in a free space, so if that's something you're interested in, check the description below. Now here's a chart. MACD gives a clean bullish crossover. A lot of traders would enter right here, but price is sitting in the middle of nowhere. No support, no resistance, no structure. Price stalls, reverses, and the trade fails. Nothing is wrong with the MACD. The signal just needs context. Now, professional traders don't just start with indicators. They start with structure. Support and resistance are the areas, and this is where real decisions happen in the market. This is where buyers step in. This is where sellers defend. Indicators only matter when price is reacting at those levels. Now, let me show you how the MACD is used properly. Here's another chart. First thing I do is mark the clear support zone. Price has respected this level multiple times. Price comes back into that support. Selling pressure slows down. At the same time, MACD shifts into a bullish crossover. Now the signal makes sense. Price reacts off support and MACD confirms that buyers are stepping in. This is where you enter the trade. Same indicator, same settings, completely different results. After entering support with MACD confirmation, my first target is always the next resistance level, because this is where price is most likely to slow down. I don't wait for the MACD to cross back down, because that is where you can give your profits back. So the aim should be at the next resistance level. But if MACD starts to lose momentum before resistance, that's a warning. And if MACD crosses bearish at resistance level, that's a confirmation to exit. The levels come first. MACD helps manage the exit, but it doesn't decide it on its own. MACD just tells you when momentum is shifting. Support and resistance tell you where it actually matters. When you combine both, you stop chasing signals and you start trading with intention. That's the difference between reacting and executing. If MACD has been giving you random results, the indicator isn't the problem. The missing piece is structure. Start with levels first, then let indicators confirm. If you want to see full breakdowns like this, the link is in description.